can do question number 1. That's about basic EPS calculation. Basic EPS calculation. Go to the LMS session 2, reading materials, question bank 2, the set of questions relating to EPS. Right. What's the question? Question number 1. Basic formula is basic earning per share equal profit after tax divided by weighted average number of shares. Profit after tax divided by weighted average number of shares. Basically, only one share will be calculated for equity holder or shareholder until then what's the value and generating for one share. So that's the basic logic, right? So then profit after tax should be calculated, should be adjusted. Whatever the earnings relevant for ordinary shareholders and weighted average number of shares. This is the basic logic we have. Based on that, question number 1. Straight away, we can see that 2021 profit after tax was given 7.2 million. 7.2 million. Right. Number of shares at 1st Jan 2021, 800. Another 600 shares were issued 1st July 2021. So then, opening we have 800 shares. Simple, right? (2021) for the period profit 7.2 million. Profit after tax. Opening we have 800 shares. In between year end and the opening date, we have a share issue of 600 shares at the mid of the year. 600 shares. Redeemable preference share 300,000. 2% per share. Non-redeemable cumulative preference shares 200,000. Dividend calculate EPS this much. What do you mean by that? You can ask that one. Redeemable preference shares, redeemable preference shares. What do you mean by that? We have preference shares. Different type of preference shares are there. Different type of preference shares are there. Right. Redeemable preference shares. Redeemable preference shares. Redeemable after some time, after kind of a maximum period, you can release that shares. That preference shares. Like again, non-redeemable, non-cumulative preference shares. Preference share ordinary share අතර difference එක දන්නවා කියලා හිතනවා. Preference shareholders, ordinary shareholders. Preference shareholders, ordinary shareholders. Preference shareholders mean they don't have overall rights. They have preference right. That's why we are telling that preference shareholders. Ordinary shareholders, for that equity holders, owners of the company, right? Preference shareholders doesn't have that much of power to take decisions. Sometimes they are earning a dividend, sometimes they are earning an interest, right? Depend on this, you have to do an adjustment to profit after tax. That's why it was given. Redeemable preference shares. It is like a preference share. They are paying interest. They are paying interest. ඒක නිකන් debt වගේමයි. ඒක නිසා ඒකට pay කරන්න interest අපි. Irredeemable and non-cumulative preference shares. For that, we are paying dividends. Right? We are paying dividends. We are paying dividends for this. Different types of preference shares we are treating differently. Why? Some of the preference shares it's very recent, very but almost like ordinary share. Whatever the features, whatever the rights they have, very like is the ordinary shareholder. That's why we are paying dividends. That's called non-cumulative, non-redeemable preference shares. So this preference shares, you see that we are paying for dividend. Right? එකට යාට dividend ගෙවන්නේ. අනිත් එකට මොකද කියලා දෙන්නේ? එහෙම කියලා තියෙද? 2%. You can see that for redeemable preference shares, we are paying interest. That's why it's not mentioning as a dividend. But the reason is very like the kind of a loan, debt instrument, right? So then, whatever the interest, 2% interest for 300,000, you need to understand that it is already been deducted from this. Right? That whatever the payment done by the company for these 300 shares into 2% of interest already been deducted from 7.2 million. That's why it's called profit after tax. Because it's the interest already deducted from the profit after tax. We don't need to do any adjustment over there. Right? But we have some other shares that's called non-redeemable, non-cumulative preference shares. It is privileged to get dividends. You need to calculate that dividend and deduct from this that dividend. Calculate it and deduct it. From 7.2 million, you need to deduct how much? 200,000 into 4. Right? 200,000 into 4. 0.8, right? 0.8 divided by 800 into 12 into 12 plus 600 into 12 into 6. So then this is called basic EPS. Any doubts? Then make a after the meeting. Yes. What is normally we are taking number of shares, what is shares? We need preference shares, we need to specify what preference shares, right? So then we can 800 first day, and we are issuing 600 shares. And for the year, at the start of the year, we had preference shares issuance. This much of preference shares that is redeemable. Irredeemable preference shares is much. Redeemable preference shares, we don't need to do any adjustment. Why? The relevant interest is already deducted. So the other shares that is not redeemable shares, we are making they are not making that expense to the real. Because of that, because not deducted from without that. They will be additionally deducted. Dividend percentage with 4.1. 7.2 million deduct 0.8. 0.8 can 0.8 can 8. ගණන් හදනකොට සමහරවිට මට වැරදිට පුළුවන්. මම ඩග්ගල හදන්න ඒක වැරදි කියලා කියන්න ඕන. Is the final outcome. දැන් මගෙන් අහන්න එපා ඒ නිසා මේක 12න් බෙදලා 12න් වැඩි කරේ. We have already discussed this, right? We are calculating weighted average number of shares. Weighted average number of shares. People who didn't come to last lecture, they don't know what it is. Weighted average number of shares. Why? We are having ordinary shares. So then, as at the reporting date, first date, we had one set of shares, and in between the year, we have a share issue. So then, the contribution for the share should be weighted. Now, is there a shares here? I'm giving us a better definition. මැට් එකකුත් නිකන් තියන්න කියලා මෙතන ඉන්නේ. මම පැදුරක් ගෙනත් තියන්න කියලා ඉස්සරහා වාඩි වෙන්න තියලා නැහැ. කොන්සෝල් හදනකොට නම් මේ ඉන්න පුළුවන්. මොකද කොන්සෝල් ගණන් හදන්න මේ බෝඩ් එක ඉඩමදි. මේ බෝඩ් එක ඉඩමදි කොන්සෝල් ගණන් හදන්න. කොන්සෝල් ගණන් හදන්න at least මෙතෙන්ට යනකම් බෝඩ් එකක් ඕන. එහෙම බෝඩ් එකක් නැහැ මෙතන. ඒක නිසා so then I have to reduce my font size. So then if you want to see that console question and the answer, you have to be here. Simple, right? Then I'm going to go කරගන්න පුළුවන්. අපි group consolidation yeah, pay your attention. Right. Five point 81. Basic earning per share. So then, what are the learning outcomes? We should calculate weighted average income per share. That's why we have given weightage 12 into 6. For last 6 months, we have given 6 months weightage. So whatever the shares we had during the period, we have given full weightage. Right? And second, if we have equity type preference shares, they are privileged to have dividend. So then it was not deducted from the profit. It transferred to equity stage. It means that if you have profit after tax, definitely you need to deduct from profit after tax. Why? We calculated the basic earning per share for only 40 shareholders. That's the logic behind that. Here you have been preference shares dividend at the level. Here we have so definitely redeemable preference shares. They understand what the reason for non deducting redeemable preference shares is we have only deduction, right? They are privileged to have interest. Once you are calculating profit after tax, under interest, you have only deducted that. That's why we are not fully discontinued. Yes. Okay. ඒක වලට පොලිසි එකක් නැහැ අපි දෙන්නේ ඩිවිඩන්ඩ් ඒක ඩිවිඩන්ඩ් එක ෆික්ස් දෙන්න පුළුවන් අපිට දැන් මෙතන ෆික්ස් එකක් හැබැයි ඩිවිඩන්ඩ් එක ෆික්ස් පොමෝබස් එක තමයි තව ඉන්ට්‍රස්ට් නැති ඒක නිසා අපි එයා කන්සිඩර් කරන ඉක්විටි හෝල්ඩර්ස් එතකොට they don't have any ownership of it but they are responsible only for that liability. And they are not having any business with. They are not taking any business with. Right? So then if we are going to kind of wind up, we are going to dispose with your value. We need to use the priority to preference shareholders. Before the ordinary shareholders, right? Okay. Question number 2. No need to do question number 2, right? Same. So then second topic, basic earning per share. I think you are comfortable now. So then I will give some other questions. You can do past papers. You can be more familiar with this, right? So then I'm moving to diluted earning per share. Diluted earning per share. Diluted earning per share. There are diluted effects over the basic earning per share to be disclosed. There are diluted. There are kind of a contingency impact. There are futuristic depreciation, amortization over the basic years. So that doubt should be cleared. That's why we are giving dilutive impact of the basic earning per share. To have kind of a dilutive effect, there should be a kind of a even contingency commitment through a warranty or option or kind of convertible bond or convertible preference share. Should know what it is. Option, warranties, convertible bonds, convertible preference shares. We have kind of instruments having this type of commitments. It is so. There is a commitment to the ordinary shareholders to give futuristic benefit. So then that should be disclosed through earning per share. If you are giving basic earning per share but lightly, this is kind of unfair inflation vessel. So then what you have to do? We have to give the exact picture about earning per share. That's why it's called. If you don't have any dilutive impact, you need to solve that. Non-cumulative, non-redeemable. Non-redeemable means in future we are not going to redeem. There is no tenor. Non-cumulative means we are not cumulative. We are not adding that profit to the this capital value. So then cumulative we are not creating kind of a profitability. That's called non-cumulative. Non-cumulative means see if it is cumulative. What is it? Cumulative is that cumulative I start daily working. There are clear. Did you get it? Cumulative nothing. Cumulative nothing. And what are relevant profit sharing? Taking portion in that. We are also profit transfer. What admin net? Average. It is non-cumulative. What admin net? Admin net is not how to get that. Yeah. Compare. We have holding shareholders, preference shareholders. Preference shareholders non-cumulative profits. Non-cumulative. If you don't have profit in this year, we not calculate, we not add the profit. We not going to add back. We not going to keeping kind of accumulated profit for them. It means they are like ordinary shareholders. Ordinary shareholders profit profit that thing. They are going to not cumulative. They have the profit share. Profit take up actual profit and irredeemable. Redeemable is cumulative. It is reason है. We have the profit then we have the active interest. There is a preferential interest payable. Cumulative value should be there. Redeemable preferential. Even the commission cumulative preference shares. Take a normally redeemable preference shares. Normally redeemable preference shares. Cumulative redeemable. Non-cumulative, non-redeemable. Why? There's no tendency to redeem. We are not cumulative profit. We are not giving cumulative profit. If we are having profit, only we are giving dividend. It's like for shareholders. That's why we are giving dividends. Understood what I'm telling you? ये पूरी theory करता हमारे नोट था होता बस cumulative, non-cumulative theory में cumulative. Non-cumulative. කොහොමද අපි අඳුරගන්නේ? Cumulative and non-cumulative. So then if we are having a shareholder or debt holder, it's clearly telling non-cumulative. Non-cumulative means with the years, it is not adding. It means non-cumulative. Right? Not adding to the whatever the cash outflow. That's called non-cumulative. So if we are incurring losses, we are not responsible to pay out. Non-cumulative. If we are having only profit, we need to pay the dividend. That's called non-cumulative. Otherwise, the first one. First one, what is that? Redeemable preference shares. Redeemable preference shares, they are eligible for what? They are eligible for interest. Redeemable, eligible for interest means it's obviously, what is that? Cumulative. Cumulative, why? If we are incurring losses, what can පුළුවන් මේ මේ පාර loss earn කරේ, we are not going to pay you interest කියලා බෑ. මොකද කරන්න ඕනේ? You have to accrue the interest by using 2%. 2% into 300,000. 600,000 accrued interest for this shares. So the next year again 600,000. If you are earning profit or not, it means cumulative preference shares. Cumulate the adding to the table means cumulative preference shares. That's why they are not considering as a equity holder. Equity holder means dividend holder. That's why we are paying interest to them. If we are paying dividend, it's like an owner. It's like an owner. If you are an owner, if you are incurring losses, are you going to cumulative results? No. For last year we had lost. We don't want anything. If you are incurring any profit, only you are getting. It's called non-cumulative. Non-cumulative means if you are getting losses, no addition for your return. You are getting profit, cash inflow if you are earning only. Right? That's called non-cumulative, non-redeemable preference shares. ඔයාගේ තේන එකකුත් නැහැ. cash pay කරලා ඉවර කරන්න. ඔයාට cumulative profit දෙන්නෙත් නැහැ. That's why we feel like a equity holder. ඒකයි මම කිව්වේ ordinary shareholder මෙහෙම නම් ඊට පොඩ්ඩක් ළඟින් තමයි ඉන්නේ non-cumulative irredeemable preference shareholders. That's why we are paying dividends. Are you okay? Then we have to work hard now, right? With a fresh parliament, no? Parliament එකේ යාර. ඒකෙන් ගන්න කට්ටියක් ඉස්සි වෙලා. අලුත් කට්ටිය data අරගෙන register කරලා fingerprint clear කරනවා කරන්නේ නැහැ. නැත්නම් මොනවාද කිසි data collect කරනවා. මෙතන කොහොමද? අර කට්ටියම මොනවද වෙන්නේ data clear. Readily available data. Now all are fresh data. So they are daily busy collecting data. You start the first session with the father. You could change that. So then now I'm going to discuss diluted earning per share. Diluted earning per share. For diluted earning per share, we need to understand this related dilutive scenarios. Share options, convertible debts, convertible preference shares. Convertible preference shares, you can understand what this, right? To the name, convertible preference shares. Preference shares are there. There is a possibility to convert that share, convertible preference shares. So within the 5 years time, it will convert to preference shares according to the agreement we have with them. So then, convertible debt. We have debt instrument. What are they? Debentures. Maybe commercial papers. Basically debentures. We have debenture agreement. Within another 5 years time, will convert to shares. So there it is. That's the basic understanding. Everybody wrong. Right? Any more enough for what's the impact for the earning per share? So that's the area we should focus. If there is a kind of agreement like that, so then within another 5 years time, whatever the available preference shares, it was not considered for the denominator of basic EPS. Basic EPS denominator, we use ordinary shares. Ordinary shares. But as at reporting date, we have some number of other shares that will be considered for this denominator within another 5 years time. So then here we have agreement for that now. As at the reporting date, we have a commitment to convert available preference shares to ordinary shares within another 5 years. It means this denominator will be expanded in within another 5 years time. If this denominator getting expanded, this one still remain the same. So then whatever the given basic EPS will be reduced. But here the mechanism අඩු වෙනවම කියලා. ඇයි එහෙම කියන්නේ? But option na, warrants na, definitely it will be reduced. But your diluted earning per share is lesser value than the basic EPS. It's sure for warrants and options. For convertible debts and convertible shares, convertible preference shares, okay, dilution එකක් dilutive impact එකක් තියෙනවා කියලා බලන්න. වාට මේක convert කරා වාගේ EP basic EPS එක වැඩි වෙන්න පුළුවන්. How it comes? එහෙම වෙන්න පුළුවන්. Again, what do you mean by? So then in near future, definitely this value denominator will expand. Once you are expanding this, still this basic EPS is higher than the dilutive EPS. වෙන්න පුළුවන්. කොහොමද වෙන්න පුළුවන්? හිතලා කියන්න පුළුවන්. අහන ප්‍රශ්නේ තේරෙන්න ඕනේ. There may be a possibility. Why? For these two items, currently we are paying something, right? We are paying interest. So then, once you are converting that to equity, what we have to do? We don't need to deduct that from profit after tax. We need to add back, right? So then current payout, whatever the eligible cash outflow, is a percentage more than the current earning per share. Let's say current earning per share 3%. Basic earning per share 3. So then they are currently eligible for one debenture, one preference shares, they are eligible for 5 interest. So then near future it will added 5. But for the denominator it's getting added less than that. Right? So then if you are currently paying higher interest to that stakeholders, definitely that will be added to profit after tax. So then the increase of your denominator is less than the increase of your numerator, right? So that's the logic. So then if there's a question like this, you need to evaluate whether is there a dilutive impact or not. If you don't have dilutive impact, no need to calculate that the diluted earning per share. ඔයා එහෙමනම් ඒක කැල්කියුලේට් කරලා කියනවද ඉස්සරහදී මේ EPS එක වැඩි වෙයි කියලා? නෑ එහෙම කියන්නේ නෑ. If there's a dilutive impact, only we are going to disclose. Right? Keep in mind. But normal situation, normal scenario, එහෙම වෙන්න බෑ. What's the reason? එහෙම normal situation එකේ එහෙම වෙන්න බෑ. ඇයි එහෙම වෙන්න බැරි? normal situation එකේ එහෙම වෙන්න බෑ. එහෙමනම් අමාරුවෙන් යන කම්පැනියක් වෙන්නේ. Whatever the hello? What's that? ආවනේ. එක්සිට් උනාද එයාපෝට් එකේ? ආවනේ. ඔව්. එහෙනම් අපි බලමු දැන් මේකේ රෑනේ එන්නවනේ. හරි. ඒකනේ තමයි හොඳයි. මම මේ ලෙක්චර් එකේ ඉන්නේ අසක් මම බැලුවේ වාක්‍යයට හොඳ මම ගන්න ඕනේ. නෑ. Right. I am telling like that. So then normally you are an investor or you shareholder to a company. You are supposed to have a earning rate. So then that is called return on equity. Expected return on equity. Let's say 30%. Then you have you are a kind of ordinary shareholder. Then have preference shareholders. Preference shareholders may be your relations, your friends, people who put money to your organization. Not like an ordinary shareholder, but it's like a kind of a preference shareholder. For them, you are giving only 20%. Other than that, you have financed through bank loan. Bank loan you are paying 17%, right? This is the normal setup of a returns you are giving from a company to your investors, right? So investors do invest to your organization with the expectation of different returns for different risks, different returns for different risks. As a shareholder, ordinary shareholder, you have two types of risk. What are they? What are they? You know, right? Two types of risk. Business risk and the business risk and the finance risk. Business risk and the finance risk. As the owner of the organization, you have two risks. What are they? Business risk and the finance risk. Risk කියන එක දන්නවනේ. මොකක්ද risk? දන්නව දාන්න. ඔය දාන්න risk. ආන කියලා කියන්නේ risk කියන වචනේ. ආයි. ඊනේ ගැඹුරක් අත්තු කරලා කියන්නේ. අර නේද? දන්න වචනයක් තමයි මම සීන් ඇති කරලා ඔය කරන්නේ. නම මොකද්ද අත්තු කරලා. නම දන්නව ටග්ගා කියන්නේ. ඒ වගේ risk කියන්නේ මොකක්ද කියනකො? Deviation from the expectation, right? So the business risk, you do a business. There's a risk of not achieving objectives and business not may be viable. Or you may lose your business. Business take a risk taker, business risk taker, right? We have many expectations from the business. It may be profitability, market expansion, customer satisfaction, quality, maybe different angle. It may change during the period. Within a decade, it may change. The business is වෙනම level එකේ. يعني මුලින් ඕනු සිරසත් එක්ක කම්පීට් කරන්නනේ. මුලින් ආව සිරස සුපර් ස්ටාර් ඊට පස්සේ ඩ්‍රීම් ස්ටාර්. නේද? ඒකත් එක්ක කම්පීට් කරා. දැන් කම්පීට් කරලා ටිකක් ගිහින් එයාට ඕන ප්‍රෙසිඩන්ට් එක්ක කම්පීට් කරන්න. එයා ප්‍රෙසිඩන්ට් එක්ක කම්පීට් කරනවා. එයා ඊට පස්සේ තව කම්පීට් කරනවා. So then now this objective of the business may change. Right? So then you have a business risk and a finance risk. Finance risk. So all about credit risk. Whatever the investment we have done, whether it can be recovered or not, that's called finance risk. That's called finance risk. Right? For these two risks, you have a return. What do you call that? Profitability. 30%. May 30% hadila තියෙන්නේ මේ දෙකටම. Whatever the return you are getting for business risk and the finance risk. Right? So your preference shareholders, they don't have any business risk. They have only finance risk. They are not involved into the business. So then they are privileged. Their return is less than 30%. But more than the bank value. Bank is 17%. So then bank, they don't have any business risk. They have only the finance risk. Company natural bank risk bank bank whatever the capital they have given may be getting overdue. Or brand the kind of irrecoverable. No. They may write off this. They may make 100% provision, bad debt provision. So then that is the risk they have. For that, they have 17% finance risk. So then what I want to explain is, as at the date, if you have this type of debt instrument, you are paying less than your return. Less than your return means less than this 30%. It means, another terms, this is like EPS, earning per share. your earning per share, your return is higher than the whatever the debt instrument value. So then, if you have kind of a dilutive impact, if you have kind of a convertible agreement with them, once you are converting that, whatever the portion you are going to add back to the profit after tax is lesser than the denominator. So then, majority of the cases, you may have dilutive impact. So what I want to tell is, majority of cases we have kind of, if you have this type of commitments, there may be dilutive impact. Right? ඒක මම කියන දේලක් තියෙනවා නේද? එහෙම interest rate chart එකක් වගේ ඔළුවේ තියෙන්න ඕනේ. දැන් currently යන්නේ. නේද? market එකේ interest rate එක දැන් යන්නේ 17 වගේ නම්. market එකේ debt interest යන්නේ 17 වගේ. එතකොට වාගේ FD rate එක කීයද යන්නේ? FD rate එක යන්නේ අනිවාර්යෙන් 10ක් විතර. නේද? treasury bill rate එක යන්නේ කීයද? එහෙමනම් 8ක් විතර. treasury bond rate එක යන්නේ කීයද? 7ක් විතර. risk free rate එක 7. market එකේ risk free rate එක 7. without any risk you can invest for 7. 8 short run. 10 you can invest in a bank with a small credit risk. What a bank එකේ දැම්මම සල්ලි හම්බ නොවේ කියලා doubt එකක් තියෙනවා. bank එකට දැම්මම නේද? නෑ. risk rating එකක් තිබුණේ නෑ. ඒක නිසා තමයි පොඩි හරි ඒ කියන්නේ government එකට වඩා පොඩ්ඩක් doubt එක නම් ඒක නිසා තමයි 2% තියෙන්නේ. treasury bill එකයි bond එකටයි වඩා FD rate එක වැඩි. For that risk premium, for the credit risk. This is not called as a risk free rate. This is the FD rate. FD rate එකට වඩා අනිවාර්යෙන් bank එකේ loan rate එක වැඩි. They are doing a business, right? They are taking money through FDs and they giving out to as loans. So then that's why they have kind of a gap. 7% gap is there for their income. For their admin cost. Admin cost may be 5, profitability may be 2. Right? 17%. So the company පටන් ගන්න ඕන කියලා කියනවා. යාළුවෙක් කියලා වගේ. දැන් apply accounting විද්‍යාව කරගෙන. වාගේ ඇවිල්ලා කොහොමද company පටන් ගන්නද කියලා. මුකුත් අහන්නේ නැහැ. වාහනේ return එක කීයද කියලා. return එක කීයද කියලා වොන්න එයා ඔයාට කියනවනම් return එක නම් ඉතින් 12% වගේ කියලා. මොකද කියන්නේ? business එක අහන්නේ නැතුව කියනවා මොකද? කරන්න එපා කියලා. business එක මොකද? පාඩ business risk එක ගන්න ඕනේ නැහැ. ඒ සල්ලි FDA එක දැම්මම sorry. FDA එක දැම්මම 10ක් ගන්න ඕනේ. දෙකක් වැඩක් නැහැ. පාඩ FDA එකේ 10% ගන්න. දැන් නිකන් කියනවනේ 9% වගේ තමයි profitability එක කියලා කියන්නේ නෑ ඒක පටන් ගන්න එපා කියලා. හොඳ පාඩ නිකන් FDA එකේ දාන්න business එක නැතුව. ඒකෝට business එක පටන් ගන්න. පාඩ හදිසියවත් loan එකක් ගත්තොත් මොකද වෙන්නේ? 12% business එකේ. bank එක දෙන්නේ 17%. පාඩ කවදාවත් loan එක service කරන්න බෑ. 17%. එහෙනම් අනිවාර්යෙන්ම ඔයාගේ business එක මොකක් වෙන්නද? bank loan rate එක වඩා වැඩි rate එකකින් earn කරන business එකක්. Right? You should have a premium. You should have a premium for what? To the business risk. This is about finance. This is about finance, liquidity management, financial decision. Right? So through that, what we can decide, once you are having these convertible instruments, you can have kind of understanding about the dilutive impact or not. Right? So that's the basic understanding of convertible debt and convertible preference shares. And then once you are having warrants and options, it may be called option or put option. Warrants and options. What do you mean by that? You have shares, you have ordinary shares, that shareholders eligible for some other shares. To purchase some other shares. That's a share warrant. Warrant is kind of a privilege, right? You know, right? For government employees, they have a warrant in the payments. Payment warrant is unlimited. We got it. We don't charge rate. That's warrant is. Warrant is a this is a kind of a privilege given to government staff. So then, if you want to give kind of a privilege to available ordinary shareholders, what we can do, we are giving kind of a share warrant to them. In future, in another 2-3 years time, you have a warrant to get some of the shares for the for this price. Okay, price limited. One, some of the market shares. If you have 5 shares, you are eligible for another 1 share for 20 rupees in another 10 years time. It's kind of a warrant you have. It's kind of a privilege you have. You have such kind of a warrant. Once you are giving your basic EPS, definitely you have to calculate diluted EPS, right? Why? The stakeholders who taking decision based on the earning per share, they should know the available number of shareholders they are having kind of option or warrant to have some other more shares in under 10 years time. It means your EPS may be reduced. නැත්නම් ඔය එක දන්නේ නැතුව ඉන්වෙස්ට් කරලා ආවට පස්සේ අවුරුදු 10 එකපාරට ordinary shareholders shares වැඩි වෙනවා. So the helping of shareholders ගේ shares වැඩි වෙනවද නැහැ? Whatever the privileged shareholders, it may be prominent shareholders. They are eligible for this warrant or the option. They will take another additional shares. If need, it will reduce the EPS for all shareholders. So then before that, before having kind of a surprises after investing, you should know what are the dilutive impact through warrant, option or convertible shares. So that is the basic understanding of diluted earning per share, right? So then you can do kind of a question and then you can understand what it is. Shall we go to this question sheet? Question number 7. Question number 7. Ignore that. Later, I circulate in the garden. So then you have to calculate diluted earning per share. Oh. Basic EPS equal reported net income 100,000 and had 50,000 shares of common stock and 200 convertible bonds outstanding for the entire year. As of the reporting date, we have 50,000 shares and 200 convertible bonds. Right? Net income 100,000. And then 50,000 shares. There are any weighted average? There's no such a share issue. Only two kind of way. Basic earning per share is that 2, right? Basic earning per share 2. Then one question so then there's a convertible bonds with a 3% interest. Do we need to deduct that from this? Are you going to deduct that interest from this? No. Why? We have already deducted. Once you are calculating profit after tax. After the net income here, in other words, profit after tax. Right? But doubt so then this net income, we assume as profit after tax. Already, whatever the interest related to bond, already deducted from this amount. That's a understanding you should have. It means your basic EPS is this 2. Then we have kind of a convertible right for this bonds, right? 200 bonds is value 100,000 par value pays 3% interest. 3% interest. Par value 100,000 and is convertible to 100 shares. So then definitely once you are calculating diluted EPS, your denominator will add 100 shares. And your income already deducted whatever the interest. So whatever the available bonds, 200 bonds, value 1,000, right? Into 3% interest. $6,000, right? 6,000. You are going to add 100 shares. 6,000. I forgot to adjust some other thing. What is that? What is that? Not 6,000. 1 minus T should be adjusted. 1 minus T. Why? We have a tax benefit. 30% tax. That benefit also should be adjusted. Why? This is profit after tax. One minus T should be adjusted. If it is necessary. That is why 1 minus T should be adjusted. Why? Answer is 2.079 diluted earnings per share. Diluted earning per share. So then you can understand, is there any dilutive impact? There's no dilutive impact. You can conclude that there's no dilution, no dilutive impact. Why? That's the reason. Your basic earning per share, 2. Your diluted earning per share, 2.079. What's the reason? As I said, whatever the value you added to the numerator higher than the value you added to the denominator. Right? The saving you are getting is higher. Economic business decision maker. That's why they are going to convert this. Because of that, you are having higher earning per share. Because of that, because of this convertible option, there's no dilutive impact. Dilutive impact. Question number 8. Question number 8. You have to calculate quickly. What I have is basically. Current condition there. Commitment is up here. You have a commitment to plan your share. You have to add back. So then, available 50,000 shares. You have another 100 shares may be added in the conversion. Because we have convertible bonds. Right? After conversion, we have a profit sale. That profit saving, we are distributing. You do question number 8. Right. Okay. So then basic earning per share 9.37. Basic earning per share. Diluted earning per share. Diluted earning per share. Yeah. Why? The capital reduction may reduce that. So then, if there's a capital reduction, it's a kind of a benefit to EPS. It's a kind of a capital reduction. There's no dilutive. It's a kind of increase. That increase may not be disclosed by always accounting conservative basis, right? Accrued basis, right? If there's a provision, we need to make the provision. If there's unrealized gain, are you going to eligible gain and no? Unrealized gain, we are going to other terms. If there's an unrealized loss, immediately they are going to P&L. Conservative basis, right? Good and conservative. Diluted EPS 6.818. You can see that there's a dilutive impact. So then you have to disclose this. There's a dilution. That's why I told you. If you are having kind of a convertible bonds or convertible preference shares, you have to check the dilutive impact. Like previous question. After having your diluted earning per share, that may be higher value than your basic EPS. But if you have kind of a warrant option, it's sure that your value is a lesser value. Why? You don't have anything to add to your numerator, right? There's a clear guidance. What are the expansion criteria? So then I thought yes. Option issue. We have clear number of shares. And then at 12, the market price of 20. So then that is the market price of 20. Per share 20, right? We are issuing 300 shares. The conversion option is the once you are having market price 20. That's the option. Once you are reaching market price 20, you are issuing 300,000 shares. So there is no value considering, right? So then this was given to understand the contract, hold option and put option. Hold option. Whatever the option, you have two options. Hold option or put option. Hold and put. Put option means would be compensate you have to think, right? Hold. Put. Put option means you are going to reduce shares. You are going to reduce shares. Hold option, you are going to issue shares. So then, in the question, it clearly says that you are issuing 300 shares for 12. You can cash inflow it. What within the cash inflow lagana? Okay, 12 into what cash number? this much cash company sure. But this much cash company, point again. Market take share price is not the call option in the market price. It should be increased to 20. If not, market price is 16. We are not going to get a call option. Right? At the market price 16, you are not paying 16. You are paying only 12. Only paying 12, there should be 300 shares. So then for this calculation, you are worrying about only the number of shares. So then you are going to put here. Or make a into Galla, make and divide the shares like that. Fine. It clearly says that you are issuing 300,000 shares. There's no change about that. Your cash flow is what? 12 into 300,000. But at the point of that, you have option. Take option එකක් වෙන්නේ. But market price එක 20 කියන එකක් තමයි 12. That's a kind of a privilege to available shareholders. Market price is 20. You are buying your shares for 12. That's the kind of a warrant or kind of option there. Okay. Right, I hope you are okay with this dilutive impact. I'm going to find equal calculation for bonus issue. Bonus issue, right? Diluted EPS conceptually done. You have to do some calculations. Don't worry, you have time, you can do that. Now we are moving to earning per share bonus issue. If you have questions, share issue. We can issue normal shares to ordinary shareholders. Normal shares, right? Normal share issue. And once you are conducting the business, subsequently you can issue some other shares to the shareholders. We have set of shareholders. The shareholders, we are issuing some other shares subsequently. We can issue normal, whatever the available normal shares to them. Or we can issue kind of a right issue. Or else we can issue kind of a bonus issue. Bonus shares. Right issue shares, bonus shares. So then the scenario wise, this is totally different. Perspective is different. Bonus share issue may be done by a very stable company. Through a bonus issue, as a company, you don't getting any cash inflow. It's a kind of a conversion of kind of a equity to number of shares. What we are doing is we have accumulated profit. That's why I am telling it's a stable company. We are having accumulated profit. What we are going to do is we are not going to give, but we are not going to distribute as dividend. What we are going to do, we are giving kind of a shares to them. Free shares to shareholders. What's the double entry? Earnings, maybe credit to share capital. Equity other forward. There's no cash inflow. Right? Through bonus issue. So there's no separate contribution for profit. Whatever the contribution given by the shareholder, it's same. There's no such a different contribution. The available cash is there. But in a right issue will be done by some kind of a company. They are searching money, right? They're searching money. So they want money for some investment opportunities. What they are doing is they are going to issue shares. They are going to issue shares. They want to give kind of prioritization to available shareholders. They are giving kind of a prominent place, prioritization for available shareholders. What they are going to do is they are issuing the share for 20. The market price of the share is 20. They are planning to give that to the shareholders like 15. The lesser value. Whatever the available shareholders are eligible to purchase shares for 15. Why? They are issuing kind of they are giving a right to buy these shares for lesser price. That is called right issue. So the what a great two of ප්‍රශ්නයක් තමයි give differences between right issue and a bonus issue. දෙනවා නේද? දෙපැත්තට දාලා ලියුවේ right issue bonus issue. මේකේ ලියුවා bonus issue there's no cash inflow. Here we have a cash inflow. දෙකේම shares වැඩි වෙනවා. There will be impact to shares. There will be significant impact to EPS through bonus issue, but the impact for right issue may be less. The stable company will be done by bonus issue, but the right issue will be done by a company having financial difficulties. Maybe not difficulties, they are lacking in finance. That's why they do right issue. Once you are doing a right issue, definitely your market price will be reduced. Right? Hey, market price will reduce. Right issue right issue right issue වෙන තියෙනවා market price එක disclose වුණොත් කට්ටිය අග්ගාලා ගන්න shares මොකද? මට අග්ගාලා eligible වෙන right issue එක. right issue ගොනු ගමන් the market price will be reduced. Right. So those are the differences, but according to the scenario, some other differences may be there. So then the operational side, the company secretarial side, share register side, there are differences. Once you are issuing bonus issue, totally differs in the right issue. Right. The accounting aspect, there's a clear impact to earning per share calculation. That's the core concept you should learn. Once you are having a bonus issue, you can understand that, let's say, the financial year 2020, 2023. 2023, you had 500 shares. 500 shares. 500 shares. Each and every 5 shares, you are giving one bonus share. Each and every 5 shares, you are giving one share, one bonus share. It means you are giving 100 shares. 100 shares for available shareholders. 100 shares for available shareholders you are giving. You don't have any additional capital, right? You do this transaction 30th June. 30th June. So then, in this year profit, 6 million. 6 million profit is there. So then you are supposed to calculate what? Basic earning per share. You are supposed to calculate basic EPS. So then profit after tax divided by weighted average number of shares. Right? Weighted average number of shares. So the profit after tax equal 6 million. So what we are going to do? We have 500,000 shares, opening shares. So the question is, we have new shares, 100,000. 100,000 new shares are there. Right? Question is, we have issued this share on 30th June. Are you going to give you kind of a weightage like 12 into 6 here? This is the question. This is the question. Keep in mind, this is the question. Do we need to give that the weightage according to the time period? Question. No need to give this. No need to give this. We need to consider this 100,000 was at the initial date. Initial date. So then weightage is equal to the shares you had. Why? There's no contribution difference. As at the opening date, we had this commitment to shareholders. It's a matter of entry. We assume that this number of shares was as at the reporting date. Not only that, what you have to do, if there's a bonus issue, you have to restate your numbers. Last year, earning per share should be restated. Why? Last year also we had this number of shares. And last year earning per share also restated. Then the logic එක මේකේ. ඇයි එහෙම කරන්න ඕනද නැද්ද? As an investor, you can think. You are looking at this earning per share, right? Earning per share. So then, if you are going to give kind of a weightage to this, your earning per share may be a higher value. Higher value. But as an outsider, you are looking at this earning per share. So once you are looking at this earning per share, you need to see that the higher value. Why? So then whatever the given bonus share for the available shareholders, not outside shareholders. So then available shareholders as at the opening date. So then that share no need to give kind of a weightage. It should be considered as it is for EPS calculation as the denominator. So that is the difference for bonus issue. Bonus issue will come here. Now, what you have to do? We have to consider that bonus issue must happen at the initial date. Not only initial date, you have to restate the last year numbers as well. So that activity. Why? Last year opening shareholders are privileged to have this bonus issue. So the last year profit also eligible for this number of shares. So then your last year 30% to be stated if they have a bonus issue. That logical? It's a logical thing here in number here. It has to order number they got here. Calculation ඒක නෙවෙයි කියන්නේ. Individual can yeah, I think the board of this. There's no cash contribution to the profit. That's not a big that's why we have given kind of a weightage, right? So then if we have a fresh issue at the 30th June, definitely we have to give kind of a weightage. But here we are not giving. Why? There's no such contribution. Contribution is same. Then no need to give kind of a weightage. It should be considered from the inception date, from the basically from the first day of the reporting period. Right. Can you all quickly do question number 3? Question number 3. Right. Then hope you are okay with this third question number 3. Right? You have to calculate basic EPS. Profit after tax divided by weighted average number of shares equal 2021, right? 4.8 million. 4.8 million. Opening shares 500,000. 500,000. First April 2021, 400,000 were issued at 20 market price and 50% had been collected during the period. Yes. 400 shares issued into 50% into 12 into 9. $300,000 bonus share issued first 11/2021. First 11/2021, don't care about that. Plus 300,000. $5.052. 5.052 is the basic earning per share. Number of shares, 50% is the right collector. How many shares nothing is calculated.
Excuse me, sir.
Yes.
Sir, me bonus share का proportionately ගන්න ඕන නැත්නම් full year තිබ්බ වගේද ගන්න ඕනේ? bonus share normal issue කරලා තියෙන්නේ.
Yes, bonus share we need to consider for full year, right?
So not for the 2 months.
Sorry.
එතකොට මාස දෙකකට ගන්න ඕනේ නැත්නම් අවුරුද්දටම තිබ්බා වගේද ගන්න ඕනේ?
So then that's what we discussed. If you have a bonus issue, here you can't see the screen. We don't need to give that the weightage, right? We need to consider whatever the bonus issue, it was happened at the opening date. Opening date. So then we need to consider that was happened 1st January 2021. Not only that, that should be adjusted to last year 2020 opening balances as well. After adjusting in the financial statement 2020, you have already calculated EPS, right? That should be restated. The reason is, once you are having a bonus issue, there's no cash inflow. There's no cash contribution to new kind of a weightage, right? That's the basic logic.
Okay, thank you, sir.
Right? This is okay. Right? Okay then. Okay. No. So then, future note. So then that's about cash collection. So then you can issue shares. Can issue shares and cash collection subscription contribution you are getting. So then whatever the other shares, no need to consider, right? You must not have kind of capital receivable in the books. If you are capitalizing this 400,000 shares, capital credit, debit into maybe capital receivable, so then there's no such kind of thing. But you can issue shares and then in the subscription, only you capitalize, right? That's why we have insurance, right? For sure, doing share issue, you can't get the minimum subscription. You have an insurance cover. So then, whatever the subscribed share, you need to capitalize. That's why we have taken only 50%. Other shares, you haven't received. මේ මොන වගේ කම්පැනියක් වෙන්නේ නැද්ද? වැඩි perform කරන්නේ නැති කම්පැනියක් වෙන්නේ නැති නේ. නැත්තම් 100%ම සත්කාර ගන්න කට්ටිය. 50% subscribe කරලා දෙන්නේ. අර 50% කවුරු පිළිගන්නේ නැහැ. Right. That's the treatment for bonus issue. Exam question එකක් බලනවද? Side issue එකට යනවද? We'll do question later. Quickly, bonus issue you are okay. Then I'm going to discuss EPS and RI, right issue. So then this may be kind of a area can be tested in the exam. That's the difficult part. Maybe the complex area highly probable to the exam. මල් දාලා තරු දාලා ඕන එකක් දාලා ලියන්න. Right? EPS calculation at a point of right issue. Right? You know that right issue is a decision taken by the management to raise capital. Raise capital, parallelly we are giving privilege to available shareholders, not like a bonus issue. We are expecting cash inflow. In a right issue, we have two elements. What are they? We are giving kind of a privilege to available ordinary shareholders, and we are having the cash inflow. Privilege. That privilege, we can say that the bonus element. That's a bonus element. Once you are doing right issue, we are giving kind of a bonus element to ordinary shareholders. That bonus element should be calculated separately. The other part should be calculated separately. Bonus element, if you have a bonus element, that should be considered from the first day onwards. Whatever the bonus part of the right issue. The cash element should be weighted. Cash element. Once you are having a right issue, you have to split your bonus element and the normal cash issue, normal share issue. Normal share issue should be weighted according to the period. Whatever the bonus element should consider from the first day onwards. So then previously we discussed basic earning per share. We have given the weightage based on the dates, right? After that, we discussed about bonus issue relating to EPS. We have not given any weightage to the time. Why? It was considered from first day onwards. There's no cash contribution. But here, kind of a hybrid option. Right issue is there. There's a cash contribution as well as a bonus element. Then what we have to do? We have to combine both. Whatever the cash element should be weighted. And we need to identify the bonus element. That should be considered from the first day onwards. That's the story. Then, based on this story, the matter is how we are going to calculate this. How we are going to calculate the bonus element. How we are going to calculate the normal share portion. That's what I am going to calculate now. For that, we have steps. I'll go step by step, right? I'll go step by step. I'll go step by step. So then, having hybrid class for corporate reporting may be difficult, right? You need to write here. So then, if you are doing based on Excel here, you are getting on board, right? So then, no effect that cannot affect you. So you need to use the board. They may not see the board. Then that's a kind of a disadvantage. But if they can hear what I am discussing currently, then anyway, we'll see. I will tell to SAP team, and once you are doing this consolidation, the board is a important factor. The consolidation question, right? You need to have different TLs and then balance sheet reporting and then P&L. Everything we need to draw here. The visual presentation should be there. Otherwise, we can based on Excel. I can share that screen. What I can do is I can do this maths in Excel. I can share with the group. That's another story. I'll do that. Whatever the question I'm giving, I'll give the answers. That's okay. But the way the steps need to be followed. The request. Once you are doing right issue related EPS, we have set of steps. First, we need to calculate what? Help calculation. Help calculation. Theoretical extract price calculation. Help calculation. Help calculation. Before that, we have a slide here. You all can see all the dilutive effect. So then, if you have convertible preferred shares, convertible bonds, stock options or warrants, right? So then whatever let's say all the things may be in one question. All the things may be in one question. There may be a share warrant, share option, convertible bond, all are in one question. There may be, right? දැන් මට අනිවාර්යෙන් එහෙම හිතෙන්න පුළුවන්. මොකද මම right issue එකක් දුන්නේ නැත්නම් මෙහෙම question එකක් තමයි දෙන්නේ. So I'm giving this type of question. This is the diluted earning per share formula. ඒකේ මේ ලොකු දේවල් නැහැ. බලලා තේරුම් ගන්න කතා කරපු දේවල් තියෙන. So see, net income deducted preferred dividend, add back convertible preferred dividend, add back convertible bond interest, right? So then, weighted average number of shares. So then, converted preferred dividend, shares from converted bonds, and shares from option or warrant. Again, if we did 3 questions for 3 options, so we have combined to one formula. So this is in the slide deck. You can practice. I will give some time for example. නැත්නම් ඔයාලා මොනවද කරන්න තියෙනවා? මේ formula එකේම තියෙද්දි දැන් තුනක් හදලා combine කරන්න පුළුවන්. ඒක කළ වැඩක් නෙමෙයි. Then straight away you can do that. So that's why I have given here. So then we did this EPS calculation with bonus share issue done. So then now we are coming to EPS calculation with right issue, right? First step, what? Theoretical extract price of the share. Theoretical extract price. Third calculation. So then we need to calculate adjustment factor. Adjustment factor calculation. Adjustment factor. Third one. Bonus element calculation. Bonus element calculation. Fourth one. EPS calculation. These steps should be followed. We are here. The way we are calculating EPS under right issue. Once you are having a right issue, we need to calculate third value, adjustment factor, bonus element. Any question? Right? These 3 steps, 4 steps should be followed. එම තරුදාල් තමයි ආන්සර් එක. එහෙම දාන්න පුළුවන් තරු දෙහෙම දාන්න. මාක් කරන්න. Right. Third calculation. Theoretical extract price. In a RI, right issue scenario, we have set of ordinary shares previously available, right? And then whatever the shares we are going to issue, for 5 shares we are issuing 1 share. It means right issue 100 shares. 100 shares we are issuing 20. But the market value is 30. This type of scenario. What is that? We had 500 shares. We are going to issue right issue for 5, 1 to 5. That's the percentage. Right? And then 1 to 5 means 100 shares will be issued. 100 shares, market value 30, we are issuing for 20. That is called a right issue. That's an example. Right? That's an example. So once you are calculating theoretical extract price, it clearly says market value of shares issued before the right issue plus proceeds from the right issue. The number of shares before the right issue plus number of shares in the right issue. Then try to calculate this through this. Can you do the calculation for this? The calculation. Other formula එකේ තියෙන දේවල් වලට discount වලට තියෙන්නේ. So do that. So then we'll understand later the logic behind, like what you mean by term. So there's actually there. Before you do that, try to do the calculation. So then to write it, you can see the formula, write it, and I have given the example. I can read here. For 500 shares there, there is to be right issue 5 to 1. It means there is to be 100 shares. 100 shares, market value 20. Sorry, market value 30, cash value 20. Can you calculate the theoretical exact price? At the time, according to the formula given, equal right. The market value of the shares issued before the right issue plus proceeds from the right issue divided by number of shares before right issue and the issued shares. Answer 28.33. Right? So then 28.33, you can compare with this. Definitely, that turf value should be less than the market value. Turf value should be less than the market value. What a Galle වැරදිද කියලා හොයාගන්න පුළුවන්. Turf කරාම අනිවාර්යෙන් so then it should be less than 30. Less than 30. But market up දාලා this should be turf value should be less than market value. Right? The value is less than the market value. The value is what once you are going through this formula, you can understand what it is. So then here, whatever the value you had previously, you are going to add whatever the cash you are getting now. Right? So then the total number of shares. As a company, what is the average return from the share issue? Average return, theoretical extract price, theoretical price you are getting as an entity. Theoretical average price you are getting as an entity. That is called 28.33 as average. Why? We are giving a benefit to available shareholders. We are calculating this term. And then term is 28.33. Term 28.33. Adjustment factor. Adjustment factor equal market value. Market value divided by term. Market value divided by term. Market price per share divided by term. Adjustment factor. That's 28.33 divided by, sorry, that divided by 28.33. Definitely, it's a 1 point figure. Right? 1.05. 1.058. This is the adjustment factor. This is the adjustment factor. This is the adjustment factor. Now we are going to calculate bonus element. Bonus element. For this adjustment factor, you can see the bonus element. This is the bonus element. 0.58. For one share, you are giving 1.58. Means 0.58 is the bonus element. What you can do is we are going to calculate bonus element equal adjustment factor minus 1. Adjustment factor minus 1. It means 1.058 minus 1. 0.058 is the bonus element factor. This should be multiplied by. This should be multiplied by number of shares we had, 500 shares. 29,000 is the bonus element. Bonus element of the right issue, right? And then number of shares you issued 100. Deducted 29,000 bonus element. 71,000 is the normal shares. 71,000 is the normal shares. Right? 71,000 is the normal shares. So then now we have these numbers. Right issue. How much of shares? You right issued 100 shares. 100 shares. Cash inflow we had for 71,000 shares. And bonus element 29,000. Bonus element. Right? So then what we are going to do? Let's say this was happened. That incident was happened 30th June. 30th June 2022. The profit was, let's say, 6 million. Profit was 6 million. So then you are supposed to calculate basic EPS. Basic EPS equal profit after tax divided by weighted average number of shares equal 6 million divided by 500,000 shares were there plus 29,000 plus 71,000 into 6 into 12. Right? 6 into 12. 6 million divided by 500,000 plus 29,000 plus 71,000 into 6 divided by 12. This is the basic EPS after right issue. As I said, we are issuing 100 shares. We calculated bonus element. Bonus element considered as first day onwards. Whatever the remaining part, 71,000 normal shares considered for weightage. That was given based on the date. That was happened June 30th. If it is happened April 1st, 9 divided by 12. If it is happened September 30th, it should be 3 divided by 12. Right? Right. So then go to the questions. Question number 5. EPS with RI. Question number 5. Profit for the year 5.6. Number of ordinary shares as per that day 500,000. 400 right issue was done next day. The market price 20. Calculate EPS. Help me. Sir. 7.42. So this is the opening shares. This is the bonus element. This is the normal shares. We have given the weightage. You can do kind of a simplification. Answer is 7.42 rupees, right? Put rupees. But then step by step, what exam again marks theorem steps term formula calculated adjustment factor bonus element earning per share calculation. Put your formula and do the calculation, get the answer. Right. I shared one past paper, latest paper to the group. Can you open the question number? Question number 4. Question number 4. It's an easy question. It was not given EPS related to right issue. Take the question number 4. Different PLC Literally agriculture. Question number 4. Number 4. Try to understand what it is and start calculation. Can you check whether you can attempt to it? Having this basic understanding about the share, then you can do it happy. Otherwise, we'll do some questions and get familiar with the concept, and then you are definitely you can do this. At least 30%. Not like what it is. ඒක නිසා මේ පොත මේ corporate reporting ලියන පොතේ සාංශු ක්‍රියාවට පොතේ උදේට රැට උඩට අගේ ඉතල පුරට නේ ලියන්නේ. එහෙම ලියන්න එපා. මේ semester එකේ අනිත් note තියන්න නැති වෙලාවයි corporate reporting ගණන්. ඒක නිසා තව පොළ ටිකක් හරි මෙන්න දැන පහදන්න. අනිත් note නියම දැන් නම් හදන්න එපා. ඔයාලට corporate reporting උනේ අනිත් subject උනේ. ඒකම නෙමෙයි. Don't do it, right? Because I am not doing it. Ada serum dia mesti yang dengan ini. Itu berarti ya. Dan annual staff list, further request calculate the earnings per share for the year ended 31st December 2023. Have you started? 2023 earnings per share calculate किया है Then 2023 earnings per share. Maybe. Okay, right issue එකක් නැති නිසා right issue එකට just extend කරන්න තියෙන්නේ. Right? 2024 right issue එකක් එනවා කියන්නේ. So you just want to take the give advices. You just want to calculate the basic earning per share, right? 2023. So then at the top of the question, clearly says that different PLC has earned profit of 3 million and 4 million for the year 2022 and 2023, respectively. The counter is not familiar with LK 23. He seeks your advice. Right. 2022 EPS was given 15. And 2020 EPS දීලා තියෙනවා 15 කියලා. 15 was given. 15 equal to number of shares were not there. Equal to 3 million divided by x plus need to check whether what's the a new share issue was done 30th June 2022. That's relevant for this, right? So then 100 shares into half. Third one, a bonus share issue was done 2023. It is not relevant for 2022 year. Preference share issued at 31st 12/2022, 500. Debenture asset 300. Note: management has decided to do right issue 2024. Preference shares are entitled to 50% dividend per share. Dividend per share. Preference shares are eligible to 50% dividend per share. So then definitely that should be added to here. 50% preference shares. Right? මේක answer එක solve කරලා වා x හොයාගන්න. x හොයාගත්ත නම් වා ගන්නවා number of shares and the opening date. Number of shares and opening date. Right. And then you can calculate. This is 2022. Make it 2022, right? 2022 May. What we can call that? Taking in answer, taking another number of shares. Taking one, you have to calculate 2023. Right? 2023 basic earning per share is the answer. Right. And then there is no exam making. මොනවද වෙන්නේ සහ මොනවද අහන්නේ මේ පැත්තේ ගිහිල්ලා කියලා දෙන්න හරි පැත්තේ තමයි දැන් මේක මොකද්ද මේ you don't have here term calculation adjustment factor calculation නේ මම ඇඩ්ජස්ට්මන්ට් ෆැක්ටර් ගන්න එක ටර්ම් දීලා අනිත් පැත්තට EPS දිලුවොත් කොහමද? නේද? ආන්සර් එකේ දෙනවා question එකේ body එකේ ටර්ම් දෙනවා. Then you have to be ready this type of questions. Right? Right. Others are simple. So then you can do the maths and get the answer. And other question, advise the accounting implication of right issue of shares. මොකද කරන්නේ තියෙන්නේ 2024 තමයි right issue එකක් කරනවා කියන්නේ. මම explain කරන්න තියෙන්නේ. So then you have to calculate adjustment factor, you have to calculate bonus element. Likewise, you have to do advices. And mention required disclosures in financial statement for the year ended 31st December 2023. Related disclosures that should be mentioned. So then this type of questions may be there in the exam, right? Right. So they're going back to slide deck. So the final slides relating to disclosures, earning per share related disclosures, right? So then basically we need to disclose basic earning per share, diluted earning per share. If there's no dilutive impact, we need to mention that there's no dilutive impact, right? And parallelly, if you have kind of a bonus issue or right issue, the bonus element should be adjusted to the last financial year. This amount should be adjusted to the previous year and it should be restated. Keep in mind. Because bonus element eligible for previous shareholders, that should be adjusted to the comparative number. And you need to recalculate your EPS. And then you have discontinued operation. Earning per share for that discontinued operation should be disclosed separately. Keep in mind. If you are going to have a new share issue, weighted average number of shares, the period should be disclosed. Right, if you are doing kind of a diluted earning per share, so then if you have kind of a share warrant or convertible debenture, convertible bond, that conversion option should be disclosed. So what are the types of conversion you are having agreement? What are the warrants you have? What are the options you have? Those are the things need to disclose under EPS disclosure. Right? So then you can go through this required disclosures. And you can go to, now you can read the standard. That's why I give each and every section in the LMS. I am uploading the standard right here. Basic lecture note, questions plus the standard. Now you can go through the standard. So the standard book is there. So you can buy it. ඕන කෙනෙක්ට මාටත් දෙන්න පුළුවන්. මේ බලලා ගෙනත් දෙන්න. ඉතින් කාටත් දෙන්න කියන්නේ channel book එක. එහෙම දෙන්න පුළුවන් නම් සතුටුයි මේ. බලමු මේ පාර්ලිමේන්තු එක කාටද දෙන්න පුළුවන්. Right. So then today we discuss about earning per share. Last week we started. Now we know what it is and the reason for EPS. But the reason for calculating EPS is that the relevant information as a stakeholder, as an investor, is very relevant and very sensible information to the market. That's why we do have a standard separately. And the common standard එක නැත්නම් මේවා කැල් කරනකොට නේද? Standard එකක් තිබිලත් අමාරු නම් standard එකක් නැත්නම් financial account කරලා මේක ඕන විදියට disclose කරනවා. That's why we do have a standard. That's why we have structured process here. As an accountant, we have to follow this basic EPS and then diluted EPS and then bonus issue and then right issue related disclosures. I hope you are comfortable. I did some of the questions. I will share some other questions to answer. Any questions because the same answers to the Mangivanda. Okay, ready for kind of time. Share. It is not that easy. Agriculture is basically practical. Agriculture. But here the case is too different. But exam verification exam ability has to come out. So then you have to work hard for corporate reporting. So then I'll do assignment. Maybe you can upload your I'll put in a message to the group. From a assignment, change kind of group to the group. I think the assignment in the assignment I'll post it. You can do that and you can share that. You can upload to the LMS. They get a reason behind that. LMS they get upload and Harina okay, filters. Then the diagram excuses then located located generation technology get the value for that. They have a locate value screen protect take a data network number is recorded T1 for data network is locate connection is not there. Here but the current message. So then if there's a logging issue, let me inform. Amala logging create an answer. Let me inform with the adequate evidence. That's what purely can do another. Part of make a useful answer. Make the relevant value but amateur. Eight the piano here upload but amateur. That's what why are you going? Sir, Urva Therum Gata, you know, are how much have you upload the appetite in the capital? You get reason 100 reason 100 happy. Please do the body, Western, you know, Western and the best. Aren't taken at you not, it's very very good. He mama, what is very and the game of the last day woman. I don't care. The relative money, if not, the other say well. That's why we informed the board committee of Srilanka issue. There are negative to a why are you here? Why away? All cheated and I was in the there was 30 again no matter, Karan and Open a value now, even if they can. They gave one similar, they can find the answers except Karan. There should be a valid answer, right? So they are excuses or method of the bar as a practice. That's a practice you need to follow, right? And I mean, practical person here I am flexible. But you need to do kind of professional job here. You need to practice the professionalism. So that's what I communicate you to be very professionally. So that's it for today. I hope that you had a good session. Yes. Now you can start reading the standard. Standard for so now only you can start your learning about EPS. You can go through whatever the YouTube video in YouTube and you can read the standard PD materials, past papers, other lecture notes, everything you can go through. If there are any other learning aspects, what I highlight is the particular exercise. 100% pretty sure that I am covered here. If anything is, let me know. Definitely we can discuss. Right?